day, gang. How are you guys holding up today? This is my new face. Eek. So yeah. Right? I'm like, okay, I gotta update that photo here to make it a little bit more perfect with what's going on right now. Oh boy, you guys. So we spent last week taking a look at what was going on here as we were coming off of highs and what to expect coming off of that high. Here we go. There. You missed it. And what the pattern was that was leading into this reversal. So great, we expected a correction. Now what are we going to do about it? And especially with everything that is going on in the markets right now, what can we expect from a lot of our favorite companies? So today we're going to look at a lot of the other markets we didn't get a chance to look at last week because we were just focusing on the indices. So we'll go back and focus on what's happening in Forex for one thing, and what we've got going on in some of our favorite companies for another. Oil, gold, of course, we'll take a quick look at those too, as well as bonds. Oil right now is just coming off a 61.8% retracement. So we're actually seeing a little bit of a bounce on oil. I was waiting for this to happen, and then it was like right into class. Okay, well here, let me show you guys that. It has some really nice little setups on the smaller time frame here. Comes off of a momentum reversal. So let me grab this. So here's where we at on oil intraday. This was the setup that we just had as we were going into session. It's the momentum reversal here at lows, and then a little bit of Phoenix. And this is the 61.8 Fibonacci retracement level. I'll show a bigger time frame here in just a second. So when we're looking at these types of drops right now that are happening in the overall market, you can look at even like what's going on back here on this intraday chart of the 800 tick of oil and really extrapolate that a lot of what can happen in the overall market with a reversal like that is similar to what we could be seeing play out on the weekly time frame. And we would essentially be at about this level in the overall market, except the market's gone down a bit faster than we've seen on this 800 tick. It's gone down more along the lines of what we've got going on the 15-minute charts. I'm going to pull that up. A lot of times people get lost in the momentum on the smaller time frames and tick charts and don't pay attention to what's going on the larger time frames. So here's a 15-minute chart of oil. You can see we had a really nice reversal here overnight where we were coming up into, this is basically a previous low zone on the 800 tick, basically from, oh, not like the 800 tick, but from, let's see, daily chart. I changed all my charts around and now I'm trying to find them. So it is from resistance from the drop a couple of weeks ago. Let's see here. I'm going to grab this. You can see this. So I'm going to pull up the 240 here. So here's what we're looking at. We're looking at the resistance from these lows that are happening in here. So we talked about this over the last couple of weeks. When we get like a V bottom and we get a nice solid move back up, those lows are really strong resistance. So in oil as a whole, it makes a lot of sense. We're going to continue to hold this zone for a while. It'd be really difficult to make it back up at this point. So use a lot of caution on the upside. The best we can really hope for, I think, at this point is if it finds some support at some of these levels down in here and we can get some shorter term bounces. But overall, I would be looking for a bounce as another shorting opportunity on the bigger time frames. So when we go and look at how things can play out at support levels, so we keep in mind that this is another reversal pattern up here. So it wasn't quite the full 2T that I talked to you guys about yesterday, or not yesterday, last week, but it is a very similar pattern. And here's our momentum reversal off of the highs. So this is really similar to what's happening in the overall market right now with this drop. It doesn't look too extreme because it's a 15-minute chart, but we are on a weekly time frame in the overall market where we have similar type of action. So the action that we can see happening on weekly time frames is people are talking about bounces and how the market can pop off of levels like this. And I'm not excited about that because what I'm thinking is, yeah, we can get bounces, but right now it's easier for things to head back lower. What we want to see happening is on the weekly time frames, we want to see movements like this playing out that are happening on the 800 tick here. So this has given us a little bit of a bounce here on the intraday charts, but on that 15-minute time frame, momentum hasn't changed. So see this momentum here? Look at these impulse waves on the downside. An impulse wave is just your main momentum move in a trend. So right now, impulse waves on the downside are stronger than anything on the upside. We're getting some minor bounces, but it's really easy for that to come back down. So we're not seeing much of a momentum shift yet. If we can see that slowing and rounding on the intraday time frame here, we need to see that same thing happening on the weekly time frames before we will get any real correction. So right now, yes, corrections like this can happen, but it's also easier for it to do continuation moves on the downside. Now here you can see that these impulse waves are starting to kind of slow here and we get this shift. This is what triggered the buy here on just that 800 time frame for a little bit of a bounce here. But the same thing can happen on the larger weekly time frames. Let me go and go over to some individual stocks here. All right, I am pulling up over here. So see this monthly time frame of Campbell Soup? Campbell. This is one that we've been watching because it had a potential to do a 1, 2, 3, coming back on the upside on the monthly time frame. And it's been holding it better than the overall market, but it's struggling, of course, with everything else. But see how this turns around up here? We had some really strong movement, and then we started to get a little bit of a shift, and then kind of a double tap bottom as it came into support there. With the increase with volume, this is the type of thing that can help us get pivots off of lows. So the more it rounds, if we get another movement like this, a 2-wave like that, the easier it is to get a strong pop. That's what we want to see before we get too excited about investing again and going in longer time frames on anything in the overall market right now. What you'll find is that as things are coming into the lows, look for this pattern here. So this is really similar to what got us turned around at the high in the overall market, except that this can take place at basically any angle. So we can see it like a move here to a slightly lower low. That can go and then shift into a move like this that can lead to a stronger pop, or it can do more of a double bottom like this, or it could just do that two wave right here and try to turn up. Now, the way that something will turn up the most strongly is if, as it bounces off of the low, what we want to see is a movement into the low, basically kind of a gradual move up. If it goes like this, that can lead to the stronger pops. So this pattern is one we call a shallow phoenix. It has a two-wave move up, but they're not rapid succession move. You'll have a correction like this in the middle. And then you'll get a base like this, where it's going to base out about the same amount of time and up to twice that amount of time. And then it's going to break higher. Now, sometimes this can start slowly. It can go and do another move. So if you got your time development where it looks like this, it pops, but it doesn't keep going and goes into another base, that's fine. That can get going then at that point. So then you can get that stronger move. Let me go and grab you guys some examples. Oh, actually, before we move on, see how this pops really fast here and then goes into correction? So when that happens, it's more common that your move is going to start off more gradually. Okay, so if you see something like a really rapid move off of the low, and then it goes into that base with a two-wave correction, it can have a harder time getting going, at least at first. So you'll find that there's a better possibility of it being trapped and it could go and turn back around and flush things out at the lows. Or if it does try to continue, it can go with a slower move to start with and then try to shift to get the momentum gaining again. So what I want to look at are just a number of examples of here of things that are coming off of lows to give you an idea of what to watch for in the overall market today. So we want to see this on a weekly time frame, not just a daily time frame. On the daily time frame, it can be fine for a swing trade, but not for longer term investments. It's going to just be something that you would see, a smaller time frame pop, but you might not see that actually happening on a weekly time frame. So let me go, and I know we've got some new people in here, so I'm kind of answering questions and messages as well. So this is very typical of what a lot of the securities are doing right now. We've got these really rapid moves, and what you'll notice is that many of them are coming into some major support levels from back in here. So you'll see things that are hitting congestion. And what happens is this can automatically trigger a lot of buys for many people. Actually, what we have happening on oil on that 800 tick that I showed you is right at the same thing. Let me go and show you guys that again. See this? It's right back into that congestion. Not exactly the same, but pretty darn close. So what we're seeing is some of these reactions off of this level, but it's not something that's giving us an extreme move. So it's easier for these types of moves to come back and do retests and even go to lower lows. So really rapid move up. Sometimes they'll go and shift and then get retest of lows. The strongest reversals usually are going to give us a little bit of a shift here at this low. So you'll see a bounce, you'll see a two-wave move like this. You might see another one, and that's going to help bring in stronger action on the upside. What we call this really horrible term here is basically a dead cat bounce. So it's not a great term. When we do have things that reverse and hold a low after a really sharp drop, what tends to happen is they'll be a lot more choppy. So you'll see a lot more overlap, really slower type of recovery. I think that given the situation we are at right now, that is not going to be as likely in this particular case. What we're more likely to see happening is what I talked about with the rounding lows. Let me see if I can show you guys. So here's an example where we get a little bit of that momentum shift. You can see here the turnaround, and that starts to bring in some stronger buying. If I pull this over, I'm gonna go grab another chart here. Oh, let's see, what can we look at? Just gonna pull up some random stuff here. This is pretty typical of recoveries that have that really strong move. So in this case, it's a gap. This is on Ulta Beauty, but it's a gap, really, really sharp gap. So see how this goes. It tries to go up and start strongly, goes into a base, but it's not really able to take off. So it puts in these stair-step moves to the upside. And that's what can bring things back up into upper levels when we have that really steep drop. It's very, very uncommon that we would get anything that happens like this, unless it is like a news thing that comes out midday. Sometimes you'll see it with the Fed announcement, that sort of thing. It will drop, it'll pop, and a lot of times that pop will actually go even farther. So you'll get like an initial reaction on the news, it'll pop back, and then it will kind of keep going in the direction where it reverses. So that is not the type of situation we are in right now. We're in, even though it seems like it's completely uncontrolled, it's actually a pretty normal correction when we're looking at how these reversals typically happen on a smaller time frame. Let me see here. I want to go back, and you know what I'm going to do? I'm going to pull up here, and I want to show you guys some of these just from like way back. Where we've got some 2T type of movements and reversals. So even here on oil, notice this really strong drop here on oil. This is very similar to what we were seeing here on the intraday charts. Very, very close to what was happening on that 800 tick, right down to the two-wave movement and the pull into there. Except we are at about the spot on that 800 tick chart. So we can see things where they can kind of creep back up, but it's easier for it then to go and turn back around again and come back lower again. So if you go and overlay that 800 tick chart, the only real difference is that there was a momentum reversal right up here at highs on the 800 tick chart. Let me actually go back down and show you that. See that? It looks almost the same, right? So we're seeing these things repeating over and over again. So this has the potential, it could pull up a little bit more, but do so in a more choppy fashion, and then go and give us some more downside again. I'll show you guys some more of the 2T type of reversals though. So with the 2T, basically what we're looking at is a two-wave move like this. We're getting the really sharp drop. And this is basically what we're seeing on the weekly time frames in the overall market, except they pulled back into here. So again, slower upside move, pulls down, shifts momentum, it's able to pop again, but it still moves lower without a bigger correction. until we start to see momentum shifting. And that's when we get a bigger correction coming in. In this case, it's a correction to the upside since we're looking at a downtrend. Here's another example. So here's another 2T. It's not as steep. We get the drop here, the correction, and it still continues lower. And here we don't have that momentum shifting yet. So there's no buy setup on this. This is just the short. Let me show you that NASDAQ chart. Here's the weekly chart. So here's the two-wave move up. Here's that strong correction. So you guys can see how there's definitely a lot of potential for this to head lower, even with getting shorter term corrections in the middle. So the daily time frame can give us these bounces. They can give us, these movements that will kind of bring in a sense of, hey, maybe we've hit a low. But when it comes to the bigger picture, it's a lot more difficult for this to give us a full recovery. This is the type of move that can take years before we see a full type of recovery. Here's another example, the movement here. So what we're seeing on that weekly time frame is this setup. This is a little bit slower, but there's plenty of them where it's faster. Again, here's the slower version. Here's the faster version. So here's the same setup, same momentum on that correction. If this is the weekly chart of the NASDAQ, hey, we could get these bounces. Then we could pull back in. I'm going to make this smaller so you can see it next to that. So what we're looking at is this move. And this is why what I'm saying as far as like how extreme this move is, it's not compared to a lot of the correction that we've seen in the past. Here's another one, a little bit different. Here's another example where we had a better recovery though. So notice what happens on this one. We've got the same pattern. There's that measured move. Here's the drop. It's really strong, two-wave drop, right? And then look at what happens right here. So we get that movement where it does the two-wave down, pops up, does that two-wave shift, and that helps it bring in more of a recovery. It's still a little bit choppier on the way back up, but it brings in a stronger recovery. So best case scenario, this is kind of what we would be looking at. Best case scenario. And then at this point, you've essentially got a head and shoulders. So that actually was triggering a short. I remember this. We shorted right up there. Here you can see it as it was coming in. So pay attention to time development too, to give you an idea. So if we get a correction on the upside, pay attention to the distance between the highs as we were going into those highs on the weekly time frame and where that measured spacing comes. So let me go and grab that weekly again. What we're going to be looking at here for places that we could get strong moves happening is first, this is one. So we could see strong pivots happening on a weekly time frame at this level. And then you also have it on a smaller time frame here. So right here, we're looking at different corrections too. So this is basically December. And then August of 2021. So those are points where we could look for larger pivots happening in the overall market. All right, let's go look at some of the other markets here, you guys. Here again, same pattern. Basically, just want to show you guys how to see some of these reversals happening. So here is another example of how momentum is shifting. We start out fast, we get a little slower, we get a little slower. Usually this will be a nice two wave. It wasn't in this case, but that's what we will see to help turn these things over. Can I go into more detail of the pivots? Yes. So which one do you want to look at? Like, you mean the movement off the high or when we're looking at the lows? The ES? All right, what time frame do you want to look at? Oops, there's my ES. Weekly? Okay. So let me flip this one over to weekly here. All right, so here's what we've got going on the weekly. So our major support on the weekly is really down in here. Now we've got some middle zone support right here. It's also congestion back in here. And this is where we're getting a little bit of this reaction. Here's that reversal pattern again though. It's when we call it 2T. So it pulls up, we've got our base, and then we've got our second move up. If you watch Forward Focus from last week, I went into a ton of detail on this pattern. You can find it on YouTube. So if you look up my YouTube channel, you'll find last week's Forward Focus. So it goes into tons of detail on expectations of how this plays out. So what we usually expect is that first target zone for a main target is here, this congestion. And if it goes into that really, really quickly, then very high probability it's going to come into this zone, basically where this channel breaks to the upside with a two-wave move. So that gave us the additional move to the downside here. When we have a bigger time frame trend exhaustion though, what we'll normally see is something that can lead to continuation movements on the downside. Now, since this dropped really fast, remember what I said coming off of lows, that it's easier to get a solid reversal if the momentum is slowing and shifting off of that low. We don't have that happening at all yet on the weekly time frame. If we're looking at continuation moves, because this dropped extremely quickly, it's like what I talked about coming off of the lows. If we had something pivot straight up almost and then go into a base, it's harder to get that upside going. So the same thing is going to apply here, where when we're looking at this movement as a continuation move, it's usually going to be slower than this initial move and choppier. So if this does go and play out with another continuation on the downside, what we would tend to see is that this could go more like this. The only exception is that if it goes with like what we would have like a 1, 2, 3, basically like this move on the upside here, kind of here, you can see it again, here again. It's basically a little kneecap. That kneecap could be a couple of months for this to develop. But if it goes out to a point where it's about that long, that's kind of like your maximum you would be looking at for that easy continuation on the downside. And we would still be looking at a greater potential that it would shift like this. Now with the time development, what we can look for some of these movements that can happen is to take our Fibonacci time extension and look at our pivot highs where these movements start. So here we've got the pivot for the 2T congestion right here. So if this goes out to about December, then this is where another impulse move has the best chance of trying to happen. So that impulse move probably is going to be something more along the lines of like these moves. So if we get like choppy action here, that would be one zone that we could get another continuation. The extent of this drop makes it trickier. This could also play out here, where if it pulled up here, did a two-wave move down like this, that time development could also bring in a bounce at that point. So we could get a counter trend impulse move at that point. What you're going to find is that the time development will usually point to something that can get a stronger movement. And as we see how momentum starts to change coming off of this low, we'll have a better gauge of which version of that is going to try to play out. When something does a really strong 1, 2, 3 like this, what we usually have is a widening up zone. So if you have a drop that goes 1, 2, 3, then we go into a widening up zone, but there's a lot of ways that that widening up zone can happen. So we'll often have to pay attention to what's going on the smaller time frames to determine how it's going to play out. So one example is this movement here on the upside. So in this case, it had a steep move, really sharp drop to the downside, was able to bounce, did a double tap, came up and basically did that 2T. It's the same pattern that happened here, just on a smaller time frame. So if that was to play out on a weekly time frame, we're talking about a couple of years for that to develop. But it's something that could happen. Now, other ways that we would see this 1, 2, 3 type of move play out is a wave can go into a longer zone of congestion and lead to continuation move. So if this went into a longer move like this, then it could go into a continuation zone. Now, really, really extreme, very, very difficult to keep up that type of momentum. So I think what we're going to see happening is a lot more back and forth type of action at this point. So I'm watching for that momentum to shift to really try to help turn us around. We can actually look at what's going on oil. It's following through exactly like what happened on the weekly time frame. I'm going to pull this up here. So that weekly chart that we were looking at earlier, we're seeing this playing out right now. So here's the shift. We got our two waves down. Here's the two wave that kind of could have started to reverse it, but it was still too strong of momentum on the downside. So we've got this extra push down here. So this is the pattern that I was telling you guys about right as we were going into session. And it's basically pulling up to the same degree that we were seeing on that weekly chart a little bit earlier. Let me show you the 15-minute again. So remember earlier what I said was that we were at about that point, and now we're pulling up more. So this can go and do things like that two wave that we saw on the weekly chart and then go and try to pull back down again. So we'll just have to see how this momentum plays out, because this at this point it's going to be the smaller time frame momentum shifts that are going to serve to lead us. This was the same thing we were talking about when we were coming into the highs on the monthly time frame. So when we were looking at the monthly chart of the NASDAQ as it was coming into this high and the ES, what we knew was that this was a correction zone. So on that bigger monthly time frame, we knew even back as far as back here that we were coming into widening up zone, that we would start to see a lot more of the back and forth action. This here could have played out to a bigger extent. We could have seen a similar pattern over here as we just saw happening here. What occurred though is that momentum shifted on smaller time frames, and that led to the smaller retest of the high. So a lot of times what we'll get are smaller patterns that will then play out on a bigger scale and kind of do a repetition like that. What I usually say is to watch for like series of threes. So if something happens once and you see the follow through, a certain way can happen again and you'll see the same follow through. But the third time it happens, you're less likely to see that same follow through. That was our clue on our daily chart when the market gave this big, huge correction here. That was that clue, because what we were looking at was one correction here that had a really sharp pullback. It was able to continue. Another correction, really sharp pullback, was still able to continue. It was clearer on the NASDAQ. So when it was coming into that Friday and we were like midday on there doing our forward focus, we knew because of that series that it was much more likely to give a bigger correction. Now, we had no idea the extent of that correction because news was not really fully coming out yet, but we knew that a correction was happening. I actually thought it was going to be more the primaries and elections that could drive it. Had no idea. So we know things like corrections happening, but we don't always know exactly how that momentum is going to play out on the moves. And that's where we watch the smaller time frames for a guide. Let me go and show you the NASDAQ because you can see that better on the NASDAQ. So here and here, and then we were in here. We also had, it was that extension on that larger time frame on the weekly charts. So between here and here, we were seeing that 100% exhaustion on the weekly and monthly time frames. So it gave us a clue to start to look for reversals, but getting two in a row and then starting a third, that is what really was the big clue that this is where that correction is going to happen. Right now, by the way, those of you that might be long this oil, we're at a pretty decent resistance zone in here. This is back to the 38.2% retracement level. What am I looking for to see longs? Well, that's that shift. So on the shorter time frame for something that's like more of maybe a swing trade or even just a bounce lasting maybe, I don't know that I would even say necessarily a couple of weeks, but I want to see something where it hits a low and then does a shift like that. Ideally, that two-wave shift is going to be what I want to see. And then I want to see immediate reaction off of that low coming up more than halfway of that two-wave move. Let me make this bigger. So if here's our strong drop into support, what I want to see is a two-wave move down like this, where then to confirm that correction, I need to see immediate follow through up to more than halfway this drop. If it slows at any point before it gets up to that halfway point, it is easier for this to go and break down again. So you want to see that really sharp move. And if it happens and you get like a little kneecap type of move, that's going to allow that to then continue and you can get a bigger bounce at that point. Let me show you this on gold. Gold gave us a great example of this. This is just a 15 tick, little tiny time frame. Okay, so here we've got our drops on gold, okay? really sharp one here, goes into a pattern we call an avalanche here. 1, 2, 3. So this is your 1, 2, 3 down, but it's not as extreme as the overall market. Then it goes and it does that 2 wave. But what's going on with this 2 wave? Right, it's still really strong. So it bounces, but it's still able to come back down. But what happens here with this 2 wave? Yes, much better shift. So it comes back more than that 50%, comes back up to this level here. Now in this case, we did get a little bit of a pullback. It came back into the channel, still held the support though, and then was able to go and do the bigger continuations. So as long as that gives you that really strong move, tries to come back up close to that previous high there, at least into that upper 2/3 zone, then you're looking at a better chance of getting that stronger reversal to come into play. So that's the type of thing that we would want to see happening on weekly timeframes. So if you're looking for something like that, I mean, this could take, a quarter to play out to see that. And then we're still not guaranteed that it's going to be a total recovery or anything like that. It's just going to be something that can give us maybe a nice strong rally for a couple of weeks. I suspect that things that would lead to some of these bounces are going to be like news of a vaccine, but it's not going to be enough to totally turn things around because then you've got implementation, right? It's not just, oh, hey, wow, there's a vaccine. Everybody's great. We're all going back to work. It's all hunky dory. Not going to happen like that. So we'll see some bounces like that. They'll like bring in like, you know, happiness and excitement, but then you've got reality of how long things really take to implement. So this here, what this is doing is it basically gave us a version of the reversal again off of the highs. This is called a tilted avalanche, and it gains momentum back down. What is the outlook for shorts on the spider that expires next week? Let's go look at our daily chart here. Pull up a 60-minute. Actually want to look at the intraday on this. Oops, this is our NQ. Here's our ES. And I'm going to add a 240 or a 60. We'll go with a 60. If you look at oil, you'll see that it held that resistance pretty well there. Just going into a 2-wave correction. So here's what's going on the 60-minute. See the steeper 2-wave? So what you need to see to get this to really turn around is some sort of slower 2-wave. So this can still creep a little bit lower, but right now it's in very iffy territory. This is the type of zone where usually I'm just scalping or I'm kind of sitting on the sidelines, but not looking at swing trades at this point yet. Because if we go back and compare what we just saw on that gold, let me pull up the ES here, and I'm going to make this smaller so you can compare it. So what we're looking at right now is this is the steeper 2-wave. So you got that 2-wave movement here. got two-wave movement like this, we're looking at things that are still trying to go lower. We're getting corrections, but there's not a huge shift yet. This momentum right here is still slower. It could shift. Easily could see this doing a flush on the downside and then popping back up. I do think we have the potential here coming up shortly that we could get some of these short-term pops happening, but I don't really see any sort of trigger for it yet. So right now, I would still primarily be focused on the downside, but not really aggressively at this second. I'll do the tick chart, see what this is looking like a little bit better. The 20,000. So here you can see one example of the two-wave and how it pops, and that there's a little bit of that shift down here at the lows. So you've got your two-wave move down, it shifts, it allows it to pop. So usually what I'll do is I'll place my order for the channel break for the pop to get into it. This is a little bit closer to what we've got going on the weekly time frame here. It's 20,000, it's taking a little bit of time to load. What do we call this zone, you guys, in League of Traders? What do we call this zone down here? Zone of pain. Yes, because what happens is we have this period of congestion here. We've got some spacing on lows here. These lows are pretty evenly spaced. So this can pop and try to give us a turnaround, but at the same time, if it can't get going enough off of that low, right now it's still less than 50% of this move down. So if it can't go and do a pretty rapid turn, then it's harder for this to fully turn around. So in something that would hold, we would usually see a V that is a little bit bigger, a little bit wider. I would go into something like an inverse head and shoulders, and that would get things turned around a little bit better. This goes up, can't make it back far enough. This is when we're doing our wave count. This is wave one down, one wave of correction, two-wave correction, two-wave down. So our movement back up is still too short, and it came all the way back down in there. So this is more of a bearish signal, but we're not seeing another short setup quite yet intraday. So zone of pain means this is a zone where people are going to get chopped up a lot more. You'll get false moves to one way, and then it can turn the other, false moves for the other way, and then it can turn back around. So knowing when you're coming into that zone is really important because you can tighten up your risk management. This is not a place that I would usually be putting on larger positions for either direction. I would want to see something that offers better confirmation. For example, if this had pulled down, done a little bit of more of a shift, and had that kind of steadier move back up where we saw it coming up more than 50% of this drop. Then corrections would be things that we would be looking for buying opportunities. And spacing wise, I would say right about there is where we would be looking for it. Now, these don't pay attention to the dates down here because we're on a tick chart. So you're not going to have that even spacing. So even though it looks like it's April 12th, it's not really April 12th. It's however many trades go off that are going to give that spacing on your 20,000 tick chart. So what you'll notice is that, I guess it's kind of hard to see here, but for where the days are breaking, like here is one break, they're kind of purple. Let me kind of mark these. So here, 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 here. They're not evenly spaced. It's because on certain days you're getting more trades going on. But when we're putting in our time development for this, we would be going from here to there, and that would be another big zone of where this could move. A shorter, closer one would be here. So if you have tick charts, that's what you can put on your chart. So if this had popped up, you know, a little bit more steadily, we would often see a smaller pivot for pullback in here, and then we would get another correction, and then a bigger bounce at that level. Nice check mark there on oil for those of you following oil right now. We've been doing more trading in oil for the futures markets just because we've been able to keep the exact same risk almost on the trades as we were able to do before this market set in, whereas on the NASDAQ, things are widening up substantially, and on individual stocks, you're needing to decrease your share size to keep your risk parameters about the same as you would have before this drop. The reason people are blowing out in markets like this is, you know, for one thing, emotion starts to take over. And you might retry a pattern thinking you've got a low. You're basically, you know, trying to catch bottoms. Or you're keeping your stops based upon the patterns, but you're taking the same share size or same contract size when your patterns are giving you bigger distances. So like if this in the market before the last month is a short, you might have maybe a 2 or 3 point stop on the NQ, right? Now it might be 10, 20 points for that same pattern on same time frame. So if you're taking same number of contracts, you could easily wind up in a lot of trouble. So are there any particular securities you guys want me to look at right now? EWZ. So we are at that widening up zone right here. Whoops. So this is our daily chart. Notice there's 3 lows in here, but the overall momentum is still really strong. So usually what happens is this can bounce, but we can get another retest of that lows where it kind of tries to shift that momentum again. Tesla. Same thing. I mean, most of these are going to have the same thing. So here's the 2T pattern. Doesn't quite go to a higher high, but that's the pattern in there. Here's the 1, 2, 3. So what we're at is the widening up zone. So again, more back and forth type of movement on here. This would help give you another pop if it did that. And that's going to be the safest setup right now. Let me look on intraday here. So intraday, we have a pop and a shift. What's that tell us, you guys? Pop and shift, what's that mean? Pop and shift. Yeah, it's easier for it to come back down. So it's easier for this to go and do another pullback into here. Sometimes we'll get it as a 1, 2, 3, where it will be tilted as a 1, 2, 3 on the upside. And that's why right in here is the zone of pain. So you've got to really watch that smaller momentum in there. It's coming off that third high. If it's going to go, it will usually hold that upper end here. This is a 60 minutes, kind of hard to see the details. Let me make this a little smaller. So what we would see to make it easier to go on the upside is you would have some sort of shift like that. So correction here is about the same amount of time. You're in a do or die zone. This is easier though for it to try to do something that could maybe be like a shallow avalanche and pull it back down. So this is a tricky pattern in here. Here's a good example of how that really strong move though, off of the lows, can have that slower follow through when it tries to get going again. These little shifts like this, where you get your two wave move down, in this case we have the gap in the middle, so we've got one correction here, two corrections here, so it's more three waves than two. That little change in momentum there, that is very helpful to get these really strong upside bounces happening again. So even on gold, let me show you how this did on gold on just the 15 tick chart. So remember, we were looking at that move coming back down here a couple minutes ago, and it was coming back into the support. So here was the reversal. It gains momentum. So here's that momentum into the lows. Now look at this. This is still really strong. It's like what we saw on EWZ, right? Popped and did this little base here. So that little shift can help get things going again. What you want to watch in this base though, is that when it pops, you don't want to see a really strong drop right away and then the base. What you prefer to see is that when it comes in, it has more of like a V top and then goes into a base. It's a subtle difference, but it's the difference between this trying to come back down again and this having an easier chance of doing a continuation. So this is a really small shift, and that's why the upside here is slower overall than the downside, and we see more back and forth as it's moving up. TNDM. Wouldn't you know? Exactly what we've been talking about, right? Here's the two wave, and then here's that little shift. So support here, this is tricky for the bulls because you have your two wave move back up. You've got a two wave move back down. This is support, but it could easily just chop here. So this is the type of thing that can go and lead to another two wave drop at this point. So what we can see happening is sometimes these will go into like a shallow avalanche and come back down. They could do a two wave like this, go into a base, come back down before they try to reverse. So this little two wave shift here can then play out on a bigger scale on a larger time frame. That's normal for that type of thing to happen. So this is why when we say looking at short-term bounces in markets, here's the stronger move. It's still pretty strong on the downside. Here's where we really get that shift happening. And if this is on a daily time frame, that can be a nice bounce for swing trades, but it's not necessarily going to fully translate as a larger reversal. Depends on what things look like on the larger time frames. But this is still your strongest setup for reversals off of the lows right now. So we're seeing these intraday. Look for them on the daily time frame, and especially the weekly time frame if you want something to hold a bit longer. So right now, this is still at a point where we could come and pull back. For it to continue, you wouldn't have wanted this flush back down. You would have wanted that base and then done a pop, but that pop might have been slower. Generally speaking, if your pop off of the lows, like that bounce, if that comes up about to maybe 38.2% or such, it's a little bit easier for it to go and put in another move. So if it's just a really small one, and it's in like the lower quarter of this drop, it might look great intraday as a really strong move, but if it is still in that lower quarter of this drop, it's harder for that to really get going again. So if you see like a drop like this, it pops up, you get a little bit of base, could have an easier chance going back and doing a couple more lows again. Can we make a higher high, a new all-time high on this? Let's see. Go look at the monthly. Where did I hide it at? So here we can actually see that shift happening. So this can be like what is happening right now on the weekly time frame in the markets and at chop. This is one way this can play out. But here where you get the momentum shifting, that helps lead this pop. It's a really sharp pop to start with. It's still in the lower quarter, right? So look at that. Exactly what I just talked about, right? It can go, but it has a harder time giving you as strong of a move. So right now, this trying to hold up, I think it's going to have a harder time. There's no pattern on this to try to get this going higher at this point. Shorter time frames, we are at risk of a 1, 2, 3 coming back down to bring this back down because we've got that megaphone happening here. It's kind of widening up at this level. When we see higher highs at zones of resistance like this, the main pattern that we would want to look for continuation would look like this. There's a couple of, well, there's two patterns that we can look for continuation like that. When it hits, let's say we've got a really strong move up here, it comes in, we get a higher high. If this has a steady V, inverse V here, we can get what we call a mega phoenix. It's basically a megaphone that is part of a phoenix. Phoenix is the first main continuation for brand new trend. So we can get that as a setup. Another option is that it can come up. Let me clear this. Give me more space. Can come up, get the correction, higher high. As long as that holds the same amount of time here to here, it's basically treating that whole thing as a correction. It's just tilted. So that can go and give the breakout higher. When you've got a megaphone though that comes and just falls back to the lower end, it's really hard for that to recover, unfortunately. You know, it's not what you want to see or hear from me right now, but that's the hardest thing with that type of megaphone. It's usually going to give you more weakness. McDonald's for Chris, I see he just had to take off, but I'll go and cover that for him too. So here, again, we're at pretty early stages, you guys. So I would really suspect over the next couple of months, we're going to see this come back down into the zone. But again, choppier movement at this point. So I wish I had a great, like, hey, here's what's happening right now, as far as let's buy this or let's sell this. But right now we're at a point where we need to be playing those smaller movements back and forth. The time for the timing on the larger time frames is not there anymore. We've got to wait for that to develop again. Just like we were waiting for it to develop at the highs, we need to wait for it to develop now at the lows. But we can still play those intraday setups. So these movements that I've been showing you, we've been seeing them play out on the intraday time frames. So you can watch things like the 60-minute or the 15-minute or even the 5-minute and look for those setups. Here's an example with McDonald's. This is still pretty steep. Here, this is an example of the tilted one I was just telling you about. Okay, so it had the lower low and it was able to bounce. We had to do a correction, get a continuation, but it's slower. This continuation here was not guaranteed though to be that momentum because this bounce was straight up. So in other circumstances, this could be slower. but you still had the setup down here with the measured move and then the slight shift in the lows there. So you've still got those happening, but they're going to be more of a short-term type of move. So this is tilted upside, not really giving us the confirmation. We would have wanted this to base there and gone to give us more upside. So this could go and tilt and turn around again at this point. There's greater risk of that happening intraday because it didn't give the faster follow through. See how long this took to correct? We can count this as 1-2 on the upside, this as the main correction in the middle. So then we would be looking at 1-2 on the upside again. We would want this correction time to be comparable to this correction time in order to come up and fill that gap easier. So since it didn't go right here, this is your do or die point, less chance it's going to make it back up to that as easily. You'll always find exceptions to these things, but these are just the general. And what it can tell you too is if you're not wanting to hold through corrections, maybe you're long on this and you don't know what that correction is going to look like, that can get you out of the trade and then looking for another entry point later on so that you're not worried about holding through a bigger correction. Let's see what else we got. SKF. Ultra short financials. Oh my. Lovely monthly we've got going on there. Daily. I wouldn't get into this as a new position right now. I think you're at risk of getting some of the whiplash coming back. Wait for another pattern on a larger time frame again. This, I would want to see something develop over the course of a couple of weeks right now. Let me see. Yeah, there's a little bit of a 2T going on in there. So it looks like this could come back, pull back a little bit more on the 60-minute. Work. Daily. So here's that megaphone again. This is, I'm gonna go up to a larger time frame. This is one of the risks when you get the shifting happening. So here kind of pops up sharp, pops up again, but this is what could happen on some of these things that have these rapid pops. They could turn around and give you a whiplash back. That we actually saw that happening on bonds. I'll show you a bonds chart here in just a second. I'm going to go up to a weekly though, because this doesn't really tell me a whole lot. Yeah, there's not enough data on here. I'm not sure what I would do with this one. I don't see any strong pattern on the daily charts for this right now. We've got a little bit of a runaway gap, but at the same time, it could also be considered to be an exhaustion gap because you can kind of see two waves in here, and some of these impulse moves in the past is about the same amount of time, and you're right into that resistance there. So it's struggling at that level. Let's see, 10 minutes. It's not really a pattern yet. This might go into a shallow avalanche because you've got the two wave move here for the pullback. So if this kind of still hangs out here, maybe pulls up just a little bit, but shifts the momentum like this. So if it goes like this and then this, that could be at risk of dropping again. But I don't, it's not a strong pattern right now. So this is something I'd probably just not do anything with at the moment. If you're long this like as an investment, just watch how it holds this zone in here. Let me go back to the daily. If this comes back down under about right, so like what I talked about when you get the really strong bounce off of it, you don't want to see a really sharp pullback. You want to see that kind of base there, and that can lead to that continuation. So since this is at that point, if it pulled back more than like here, then you're looking at the potential that this can come back down again and even go to a lower low. I think that is what we have as a really big risk right now. We could see false breakouts to the top, but it's not giving us that pure base that we would need for a really strong continuation. It's more of a pop and shift. And when we get a pop and shift, it's easier for it to turn around. It can go and chop around a little bit more here, but ultimately it's easier for it to turn around. So that would be my main worry at this point. Let me show you that TLT. So our bonds here, this is what you've got to watch out for on a lot of these securities. Watch out for something that just kind of gains that momentum. So down here, this is great for buy. See how you have the strong drop, the slower drop, and then the slower drop. This is that two-wave move here. Here's that base that I shared with you guys. That means you're more likely to get a really strong move coming out. The steeper this is, the harder that bounce is going to have to get off the ground, and the more easy it is for it to just go into something that can come and do some lower lows so that you get it rounding off on a bigger time frame. This is really played out over a long time. This version here, shorter time. So the steeper each of those waves are, the harder it is to get going off the ground. The slower they are and the more spread out, the easier it is for it to get that pop coming in. So you'll see more of this version and the current market. Amazon. Amazon is a very speculative play at the moment. So we've got our two waves down and we're right back up into that midway resistance. So what we have to see is how does it react to that resistance? That base that I was telling you guys about, how does it do that here? So time development, here's a kneecap on the way down. Let me spread this out so we can see this a little bit better. Oops, wrong button. So this is the correction on the way down. So you've got your two waves, right? See how this popped? It's basically a bigger version of that same thing. So in this pop, it wasn't able to sustain it. It went for another two waves, but had more of a shift than on the way down. Now we've got our two waves up and we're back in that resistance zone. So spacing wise, this could do an inverse head and shoulders and go there, but ideally for continuation, we would want this to go faster because we would want it to sustain this momentum that it already has in play here. So if you see rounding off here intraday at the highs, it's easier for it to have a stronger pullback, and it could go into another move back down like that, so that you would end up with more like the three lows before it would try again. So then at that even spacing zone, it would try again. So if it rounds off here, instead of going into a base, then this potential is greater. Sometimes patterns that we're going to see here coming off of these lows will get megaphones as continuations on the downside. So they'll look like this, and then they'll come back down again. So watch out for that. That's going to be potential for a lot of these securities too. So when something does happen here where it bases and it comes back up, can't break that 76.4% retracement, that can bring it back down. Exactly a mega lanch. All right, you guys, I know I ran over by like half an hour here today, but I wanted to cover a number of these for you guys so that you would have a really firm grasp on the type of patterns to watch for right now in this market. And like I said, there's not a lot of core setups that are triggering at this moment. So be cautious of that, but watch for the ones that we talked about in today's session, because those are the ones that are going to bring in more of the impulse moves again, where we can see some of these multi-day moves versus more of that choppier back and forth. Okay. All right. So I will get this up on YouTube for you guys to go back and review. And like I said, go and review last week's session too. Okay, last week I talked about the reversal strategy in a lot more detail. I started out by showing you guys the ebook, kind of help those of you that were having like kind of emotional and discipline issues. But about like, I think 5 or 10 minutes in is when we start talking about the pattern development. I started to go and edit it to make it just focus on the pattern for you guys, and then I got distracted with all of the coronavirus stuff. So you still have the really long version up there. But that also talks about what to look at for the lows too. All right, you guys, I will see you back here next week. As Donna said, stay safe and take care and good luck out there.